For the internal stuff, we apologize this morning because of the technical glitch that we had. So first off, we'll be presenting on the results update on Seng and DBS Group Holdings, followed by initiation report on China Apple Brightwater. So without further ado, let's begin with it. We have Seng. They just reported their results last Thursday, the first quarter results. So it was a slow quarter, but nonetheless not unexpected. Revenue was down 33% to 111 million, and this is because bulk of the revenue was really recognized in first quarter 2015 from two projects, 9 Residences and Junction 9. And as we move down the line, gross margin were down quite a bit because these two development projects, first 9 Residences was a higher end development project, and Junction 9, which is a commercial project. Nonetheless, this kind of projects normally command a higher margin. So just in first quarter itself, there was only recognition from High Park Residences. And as of the first quarter, it's really 96% sold. Profit before taxes was down 80% because of the higher... Oh, sorry, I forgot to share the slides. But yep, so let's get back to it. First quarter, the profit before taxes was down because of higher administrative expenses. This was pretty much one time from the launching of Alexandra Park Hotel, which was incepted in May 2015 last year. Subsequently, profit after taxes was down because of all the reasons I've mentioned. Now at this new development project, which was relaunched in April 2016, Fulcrum, it's 30% sold as of now, as of first quarter, and before relaunch it was 13.2%. Going forward, sales are most likely to be slow because of the large supply of unsold units, and as well as the larger quantum that is required to shell out to buy one of these units. So financing is a difficulty. But the saving grace here is that the developer is not in a hurry to clear these units. Why is it so? Because QC charges is only coming in end 2017, and more importantly, since land was bidded before 2012, they are not subjected to any ABSD charges. Over in Australia continues to perform well. So one of these development projects, Williamson's Estate, has already been 100% sold. Profits will book in FY18. It sees a gross development value of around $120 million or so. And on the same land site, they recently launched apartment development called Willow Apartments. Just within a quarter, 25% or so was already, 25% or so was already sold, and we expect sales to still be good going forward because of the Chinese buyers are continuing to buy units in Melbourne and Sydney. And litigation issue at Tower Melbourne is still ongoing, but the good thing over here is that demolition work approval has already been granted, and it's just a matter of time before construction begins. For Tower Melbourne, you expect revenue to be booking in 2019. Next, they have 3 land banks as of now, 1 in Singapore and 2 in Australia. So the availability of land bank provides pipeline for future development opportunities. And the other consideration is that you do not want to be caught without any land bank just in case the government reverses the cooling measures. Next, for its construction segment, there's a steady source of revenue, and there's at least some form of margin visibility there. And as of first quarter of 2016, construction book stands at $570 million or so. And this year, HDB is going to launch 18,000 units. This is a 30% increase compared to last year of 15,000 or so. Some more granted with the developer's good track record. in HDB development, we think that it's in good stead to carry on clinching projects. Finally, we saw encouraging performance at the hospitality and property investment segments. For the hospitality segment, revenue came in at $6.5 million compared to $6.4 million in the previous quarter. And we think that this is pretty encouraging performance due to the challenging outlook or the current challenges in the hospitality segment. Property investment segment registered $2.5 million in revenue, which is 41% higher due to the high occupancy rate at CES Center, which came on stream last year in 2015. And next, we will have Jeremy, who will be presenting our results for DBS.
Hello, good morning. Okay, so as for DBS, we'll just recap our forecast for the 4Q15. Okay, so the closing price on our last report for after the 4Q15 results was the closing price was $13.40. We had a target price of $15.35, and since then we actually moved up in line with our ratings, about 14%. The average price for the closing period for Q15 to the first Q16 was actually 15.22, so it's very close to our forecast. Okay, so basically some of the key points from the management's guidance during the 1Q16 results. So the trade loans have actually deteriorated further, and what will actually support the loans growth moving forward is actually the non-trade loans, which is typically your fixed investments like real estate, housing loans. So what was striking to us was that the CEO was actually quite confident of 5% loans growth during the 4Q15 results, but by 1Q16, the loans actually dipped, right? So we felt that this is actually more in line with the deteriorating economic sentiment. And so moving forward, net interest margins performance will be more of a priority rather than actually growing the loans books. So what has changed in our forecast is also owing to the fact that they have kind of be very selective about their loans growth. So whatever business they're going to take on, they're going to watch it very carefully. And so our NPL formation for FY16 was revised to 1%. Before that was about 1.3%. So as for DBS, what is really different is that their construction loans have declined, which is different from what OCBC has performed and how UOB has performed. Because OCBC and UOB have to increase their construction loans, we feel that actually DBS will be more selective, but it doesn't mean that the asset quality is superior, because they still have large exposure to some of the other loan segments, such as the transports, manufacturing and transport. So considering that we are still on the lookout, as for whether DBS is still at risk of deteriorating, for any NPL deterioration moving into this year. And as for housing loans, Hong Kong housing loans have really slowed down, and so what the guidance is towards dependence on Singapore housing loans, and refinancing will be quite a big thing. And we are a bit concerned that towards the second half of this year, there might be enhanced competition amongst these three banks for housing loans. And so in February, when we talked about it, we were predicting that actually the trade loans will be more challenging, and of course they will be emphasizing on a lot of these fixed asset loans, which is actually happening now. So we reiterate this as the fact that the health of the SG housing market is critical to bank performance this year. And if anything unforeseen is to happen to the SG housing market, then we will adjust our rating accordingly. So the target price for DBS is now 1609. That's on the back of very good net interest margin management. And we believe that DBS will be able to manage that pretty well this year. But we will still be very cautious about how the housing market will be, and if there's any deterioration, this target price might change. Thank you very much.
Hello everyone. Last week we initiated the coverage on China Aeropipe Water Limited. Now let's look at the company snapshot. The last close price of China Aeropipe Water was 64 cents, and our initiated target price is 73 cents, which imply a potential upside of 14.4%. As you can see the chart here, over the past 1 year, the Aeropipe Water's stock price was in line with the market. And the green line here is the Straits Times Utility Index, and the purple line here is the Straits Times Index. So until 2 weeks ago, the stock outperformed the market. As Aeropipe Water's major business is to build and operate wastewater treatment plants in China, now let's look at the investment thesis of the sector in China. So basically, China now is still facing water shortage. While it is increasing the demand for water, so the more water consumption, the more water discharge volume, and it will drive the strong demand for the related treatments. And also the central government has impetus to improve the wastewater discharge standards so that they will hike the water tariff in the upcoming years. So in recent years, the government has announced quite a few favorable policies and regulations to guide the industry's development. And we assume that this is a sustainable business, and Aeropipe Water is a defensive stock. Now let's look at the water resources situation in China. So overall, China has quite abundant water resources. However, when it is calculated by per capita, the measurement dropped to only 1/3 of the world's average. So the water shortage is a hurdle for China to maintain the sustainable development. And so far, water recycling is one of the effective solutions to deal with these issues. So here we can see the picture of the water consumptions and discharge in China over the past 10 years. The water consumption is actually trending up. So was this wastewater discharge volume. So due to the urbanization initiated by the central government and the restructuring and industrial upgrade, the volume gap between the industrial and household wastewater discharge is widening. But overall, the total wastewater discharge volume is trending up as well. So as a result, it boomed the wastewater treatment development in China during the period between 2005 and 2014. The number of urban wastewater treatment plants surged by 8 times, reached over 6,000 in 2014, while the design capacity tripled up to 180 million tons per day, with the compound average growth rate of around 15%. So there is no doubt that the volume gap between the water discharge and treatment volume is narrowing down. However, until 2014, the gap remains at around 20 billion tons per annum. Now let's look at the wastewater treatment standard. The whole sector now is still following the standard which established in 2002. It was quite outdated, and in recent years the central government has scheduled to plan to amend this policy to raise up the discharge standard. So look at the table on the upper right corner here. There are two main indicators to measure the water quality. COD stands for chemical oxygen demand, and AN stands for ammonia nitrogen. So the less concentration of these two indicators, the better water quality. And the chart below shows that the post-treatment concentration of both indicators. So from the period between 2011 to and 2014, actually the concentration of both is trending down, which means that the water quality is improving. However, compared to the standard show here, the average post-treatment discharge discharge water is still far beyond the national standard. So in the coming years, the wastewater treatment plants operators need to upgrade their plants and improve the discharge standard and make sure a better water quality. And we listed several favorable policies and guidance here. Let's focus on the top two here. The water pollution prevention and control plan, which is so-called Water 10 Plan, was released in April last year, and it stipulated 10 aspects of the water pollution's treatments. Together with the 13th Five-Year Plan, the government has guided the development of the wastewater treatment industry and will put more stringent on the regulations. Now let's look at the investment merits of China Aerobic Water. So there are two main business drivers here. One is the wastewater treatment capacity. The other one is the water tariff, which is the wastewater discharge fees that they collect from the government. So if both these two drivers keep growing, it is estimated that the company's business will perform better in the future. Now let's look at the geographic breakdown. As of December FY15, the total design capacity reached 4.6 billion tons per day, including the reusable projects. But you can see here, the wastewater treatment capacity is around 4.2 million tons per day. It is the major driver of the business. So we will analyze the wastewater treatment segment later. And according to the management, in FY16, the design capacity will be 1 million to 1.5 million tons per day more. And also, Shandong, Jiangsu, and Liaoning, these three provinces, capacity took up around 81% of the total design capacity. Now here we listed the wastewater discharge volume in each major cities where Aerobic Water operate their treatment plants. On the upper right corner here, this is the summation of the major cities in Shandong province, which recorded a compound average growth rate around 5.8%. And the lower left corner here, it is the summation of annual wastewater discharge volume of the major cities in Liaoning province. And the last chart is the summation of the annual wastewater discharge volume in Jiangsu province. So as you can see that for this 10 years period, the wastewater discharge is trending up. So we can forecast that the related treatment volume will grow at a moderate rate. The next driver is the wastewater tariff. So last year, the government has announced a policy that the urban wastewater discharge fees will be lifted by the end of this year. For those resident usage purpose, the fees will be no less than RMB 95 cents, and for those non-resident usage purpose, the fees will be lifted more than RMB 1.4 yuan. So the table on the right hand side here shows the current water tariff. Only Jinan and Qingdao, as shown here, the water tariff was adjusted last year, and the rest of these cities is waited to hike the water tariff in the coming years. Another thing is, if the operators upgrade their wastewater treatment plants from grade 1B to grade 1A, the water tariff that they charge to government can be hiked by 30% to 50%. So last year, Everbright Water acquired Dalian Dongda, and the discharge water standards of those plants under Dongda, 60% out of which are still grade 1B or below. So we will foresee that in this year, the whole group's wastewater discharge fees will be improved. As we know that this kind of business is capital intensive, so it requires substantial funds to support the capacity expansion. So as of December FY15, China Everbright Water held cash on hand reached 1.7 billion Hong Kong dollars. And it also acquired the banking facilities total amount to more than 10 billion Hong Kong dollars within 2 years. And lastly, it secured long-term loans from international finance corporations, and the amounts will be 140 million US dollars. So the outlook in this year, the company will keep expanding their capacities, and they target those projects with IRR from 8% to 10%. And the management gave the guidance that this year's capex will be more than 2 billion Hong Kong dollars. The next slide is the catalyst for China Everbright Water. So around 3 weeks ago, the management announced that the group won the Zhenjiang Spawn City project. So the concept of this Spawn City project is that it will involve in the construction and the operations not only of the wastewater treatment plants but also of the rainwater pump station, drainage networks, etc. It is an integrated ecological water system. So you can see here the investment scale is quite large, amounted to 2.6 billion RMB. And besides, more than 130 cities has proposed to apply a smart city project. So it is estimated the market cap for such a kind of project will reach a trillion RMB. Lastly is the valuation methodology. So we use the PE multiples to derive our target price. As the wastewater treatment industry is quite large in China, we can find several peers within the industry. As you can see the peer comparison table here, we exclude the big market cap such as Beijing Original Water Technology and Chongqing Water Group here because their market cap is much higher than Aerobat Water. And we derive our target price based on the forward PE, the average of the forward PE, and our estimated APS in this year, which is 3.8 cents. So our target price is 73 cents. Okay, today's our presentation is ended here. So any questions?
Okay, hello. Yes, we have a question on whether DBS will be able to maintain the dividend payout of 60 cents. Okay, so what happens is that there's a guidance. If you read off from several media and all that, there's actually a revision to the Basel, and the guidance to that is the risk-weighted assets, right, for the banks would increase. But we also sense that there's a divergence in views on this risk-weighted assets. So like OCBC and UOB, they are a little bit more conservative. They feel that the risk-weighted assets will definitely increase, while DBS feels that they can manage this this rise. They will be able to manage it well, and they will not spike up too much. But in that sense, we feel that nonetheless there would be more impetus for them to retain the earnings and build up the book value rather than actually giving out the dividends. Well, 60 cents may still be able to maintain, but in our forecast, we put it at 58 cents. And we do not expect any super bright increment of dividend because it is definitely in the interest of the banks to actually retain more earnings under challenging economic environment. Right. Thank you very much.
There is a question asking about the airbright water will give out a dividend. So there is no track record because in FY14 they reversed take over the Hancock, and last year they acquired the Dalian Dongda. So in FY15 they declare about 0.35 cents per share dividend. And we don't have any comments regarding the ETF stock in Hong Kong. And there is a question asking about the airbright water, whether the airbright water will be privatized. So we are not sure the answer about these questions. And also there is a questions asked about airbright water will sell the water to the government or to the consumer directly, and the time frame of the height of the water tariff. So basically, China Airbright will collect the fees from the government based on the BOT contract, and the water tariff will be reviewed every 3 years based on the historical policy. So if there is no other questions, we will end our webinar here. Thank you, everyone.